Hello everyone, welcome back to our tutorial. My name is Adela, and this week's topic is about job costing. From our previous lesson, we have learned how to calculate the total manufacturing cost. It's basically just sum up the direct material, direct labor, and also the manufacturing overhead cost. But in reality, companies often make more than just one product, and each product has its own cost structure. So we have to use these types of costing system, job costing and process costing. In job costing system, the cost object is a unit or multiple units of a distinct product or service called job. So for example, if you sell personalized cake, you will use job costing system because each cake is unique. You may call the cake sold to customer A as job A and the cake sold to customer B as job B. On the other hand, there is process costing system. In process costing system, the cost object is methods of identical or similar units of a product or service. Again, if you use the selling cake example, if your cake that you sell is identical, then you may use the process costing because the cost of each cake is the same to one another. For this tutorial, we are going to learn more about the job costing system. So these are the example of job costing and process costing used in service sector, merchandising sector, and also manufacturing sector. Okay, so there are several forms of job costing. In this tutorial, we are going to learn two of them, actual costing and normal costing. In actual costing, as the name suggests, we calculate the total cost using the actual quantity and also the actual price. So if you sell cakes, then the direct material maybe will be chocolate bar. So the AQ, the actual quantity, is how many chocolate bar that you use for each cake. And for AP, it's the actual price. The actual price of each chocolate bar that you use to make the cake. For direct labor, the actual quantity here is how many hours that you spend making those cakes. And the actual price is wages or the rate, how much money that you will pay to yourself after making those cakes per each hour, per hour. Next is manufacturing overhead. The actual quantity for manufacturing overhead is a bit different because we use the actual quantity of cost allocation base. So cost allocation base is the cost driver of the manufacturing overhead. For example, if the manufacturing overhead is electricity cost, the cost driver may be the direct labor hour. So the AQ here is the actual quantity of the direct labor hour. As for AP, the actual price for manufacturing overhead is the actual manufacturing overhead rate. How to calculate the manufacturing overhead rate is we define actual manufacturing overhead by actual quantity of cost allocation base. The problem with actual costing is it's a bit tricky to predict the actual manufacturing overhead rate because the number may vary throughout the year. So we want to use another costing system, which is normal costing. In normal costing, we still use the actual quantity and actual price for direct material and direct labor because it's easier to trace those costs per product. But for manufacturing overhead, we change the actual price to standard or budgeted price, or we may call this a SP. How to calculate the standard and budgeted manufacturing overhead rate? Again, it's pretty similar. We divide the budgeted manufacturing overhead cost by the budgeted quantity of cost allocation base. So you already understand the difference between the actual costing and normal costing. To get better understanding on how these things work, let's just jump into example. Example 1. Donor Corporation manufactures custom cabinets for kitchen. The cost object is custom cabinets for kitchen. It uses normal costing system with two direct cost categories, direct materials and direct manufacturing labor. And also, it has one indirect cost pool, manufacturing overhead cost. It provides the following information for 2017. Budgeted manufacturing overhead cost, budgeted direct manufacturing labor hour, actual manufacturing overhead cost, and actual direct manufacturing labor hours. In this case, we have to calculate the total manufacturing overhead cost, the total manufacturing cost of the 32 Burndale Drive job using actual costing based on this following information. So we have actual direct material cost, actual direct manufacturing labor, and also the actual direct manufacturing labor rate. To calculate the total manufacturing cost, we have to know the direct material, the direct labor, and also the manufacturing overhead. For direct material, we already know that the total cost is $3,500. So we just input this number. As for the direct labor, we use the previous equation, actual quantity times actual price. The quantity here is the how many hours spent to make this custom cabinet, which is 160 hours times the rate or the price, the actual price of the direct manufacturing labor, or in this case is $20. Okay, so we get that the total cost of direct labor is 160 times $20. Okay. Last one is manufacturing overhead. We still use the same equation, actual quantity times actual price. The actual quantity here, the cost driver of the manufacturing overhead cost is the direct manufacturing labor hours, because this is the information that is given in the question. We know that the actual direct manufacturing labor hour is 160. So it is 160 times. We have to first find the actual price or the actual manufacturing overhead rate. So the actual manufacturing overhead rate, we know from the previous slide, is the actual manufacturing overhead divided by the actual quantity of cost allocation. Okay, the actual manufacturing overhead is $990,000 divided by the actual quantity of cost allocation base, or the actual quantity of direct manufacturing labor hour, in this case is 31,000 hours. So we get the actual manufacturing overhead rate is $32 per direct manufacturing labor hour. So we multiply this number with $32. So therefore we get 5,120. So the total manufacturing overhead cost, total manufacturing cost, the sum of this number, it is 11,820. That's example 1. Moving on, example 2. The question is the same as before, but the difference is we have to calculate the total manufacturing cost using normal costing. Example 2. Okay, so the direct material and direct labor will be the same. We still use the actual quantity and actual price. So we just copy this number, but the difference is related to the manufacturing overhead. In manufacturing overhead, we have to multiply the actual quantity, and the standard price. So therefore, we have to first find the standard price or the budgeted manufacturing overhead rate. Budgeted manufacturing overhead rate is budgeted MOH divided by the budgeted quantity of cost allocation base. So the budgeted manufacturing overhead cost is $960,000 divided by the budgeted quantity of cost allocation base or the budget direct manufacturing labor hours, which is $32,000. So we get budgeted manufacturing overhead rate of that's responding this way. 8,000 divided by 32,000. So the budgeted manufacturing overhead rate is 30. So we multiply the actual direct manufacturing labor hour with the rate, which is 30. And then we get, there's typo. This should be $4,900. $4,800. So the total manufacturing cost will be the sum of this number. Total manufacturing cost or $11,500. Okay, so that's how we calculate the total manufacturing cost using actual costing and normal costing. Okay. So this is the overview of job costing. The diagram will explain how job costing works. So we have cost object here, or custom cabinets for kitchen. And then we know that each product consists of direct cost and manufacturing overhead cost. Direct cost consists of direct materials and also direct labor, while allocated manufacturing overhead cost is we get this number by dividing manufacturing overhead cost and the direct manufacturing labor hour, because this is the cost allocation base from our previous example. Manufacturing overhead cost in this case is the indirect cost pool. By dividing these two numbers, we get the budgeted manufacturing overhead rate that we use to find the allocated manufacturing overhead cost. If we sum these two numbers, the allocated manufacturing overhead cost and the direct cost, we could get the total manufacturing cost of the cost object. Okay. So the next section is about flow cost in job costing. So in job costing, we have two types of costs. It's the same as our previous tutorial or previous material. There are inventoriable costs and also period costs. For period costs, we just have to expense it after it incurs. However, for inventoriable costs, there is a flow on how the cost is expensed. For direct costs, direct material and direct manufacturing labor is traced to work in process inventory. So we convert the direct materials and also the direct manufacturing labor into the work in process inventory. So the journal will be debit work in process inventory and credit materials control. We'll get into that journal, how the journal entry should be. In our example, I will just give you a brief summary on how uh, the, the cost flow in job costing. As for manufacturing overhead, we allocate those costs into work in process inventory. After we get the work in process inventory, we then convert them into finished good inventory. And when sales occur, we expense the finished good inventory as cost of goods sold. Okay, so let's just try example number 3. Example, so Dona Corporation manufacturing custom cabinets. It's the same as before. And we have following information: actual direct materials, actual direct manufacturing labor costs, etc., etc., until cost of goods sold. Okay. We also have this information about budgeted manufacturing overhead costs and the direct manufacturing labor hour for 2017. So we have to present journal entries for usage of direct and indirect materials. Okay, so A, usage of direct and indirect materials. So for the usage of direct and indirect materials, first we look the direct material. So we know that from this diagram, we trace or we convert the direct material used as work in process inventory. So the journal will be work in process inventory. The debit is work in process inventory, and the credit is materials control. So how many direct materials, how much direct material that we use? That is $60,000. We already record the journal entry for direct materials. As for the indirect materials, we do not convert it into work in process inventory, but instead we use manufacturing overhead control account as the debit because the manufacturing overhead is allocated. So as the manufacturing overhead cost incurred, we just use manufacturing overhead control account. And also materials control. Because we assume that the account for raw materials as for direct or indirect is the same. It is material control. The indirect material use is $3,000. 3,000. Okay, so if you want to use just one journal entry for this two, so work in process inventory $60,000, manufacturing overhead control $3,000, and material control $63,000. That's also okay. So I want to separate these two so you can understand the different treatment on how this uh, uh, how different treatment for direct and indirect materials. So B is manufacturing labor incurred. Okay, so manufacturing labor incurred is the direct labor. That because direct labor is direct cost, we convert them to work in process inventory. Because we pay the direct manufacturing labor cost with cash, so the credit will be cash control. If we pay the direct manufacturing labor cost with account payable, then the credit will be account payable. So it depends on how we pay this cost. So we know that the actual direct manufacturing labor cost paid is $54,000. So credit will be the same, $54,000. So C, manufacturing overhead incurred. Manufacturing overhead cost. So for manufacturing overhead cost incurred, the treatment will be the same as the indirect materials, as indirect materials is also manufacturing overhead. So we use manufacturing overhead control. And the credit is all manufacturing overhead costs that incurred. So we have supervision and engineering salary, or it should be cash control because we pay those costs with cash. Cash control for the supervision and engineering phase in cash. I will put that so you know where this number came from. Salaries and supervision and engineering salaries. It is how much it is? Oh, $50,000. Okay. Also, we have plant utilities and repair paid in case. Another cash control. You can just sum this number and you don't have to separate this. You don't have to break down this cost. However, I just want to show you so you're not confused. There's plant, utilities, and repairs. Just $10,000. Okay. Another account is plant depreciation. So depreciation, the credit of depreciation expense is accumulated depreciation. So we use accumulated depreciation account. Depreciation for plant is $16,000. Okay. Actual direct manufacturing labor hours, cost of the job completed. Okay, so that's all the manufacturing overhead cost include. So the total of manufacturing overhead control is the sum of this number. Get $76,000. That's the manufacturing overhead cost include. Okay, D. Allocation of manufacturing overhead costs to jobs. Okay, so because we use normal costing, we allocate this manufacturing overhead cost as work in process inventory. Credit is manufacturing overhead allocated. Okay, how much manufacturing overhead cost allocated to this cost object? So we know that the manufacturing overhead allocated is actual quantity times actual price. The actual quantity, the actual direct manufacturing labor hours, because the cost driver is direct manufacturing labor hours, is 2,700 times the actual price or the budgeted manufacturing overhead rate. We haven't known the number yet, so we have to find it first. Budgeted and manufacturing overhead. It is budgeted. It is budgeted manufacturing overhead divided by budgeted quantity of cost allocation days. We know from the next slide budgeted manufacturing overhead is actually the same as our previous example. So we just use the number that we calculated before. The budgeted manufacturing overhead rate is 30. So it is 30. Actual price is $30. So the manufacturing overhead cost allocated is $2,700 times 30. So work in process inventory from the manufacturing overhead cost is $81,000. 81. That's for E. For E, we have to record the journal entries for cost of jobs completed and transferred to finished goods. So we convert the work in process inventory into finished goods inventory. So the debit will be finished goods inventory or finished goods inventory, and the credit is work in process inventory. Okay, how much work in process inventory that is converted into finished good inventory? We know the number is this, cost of individual jobs completed and transferred to finished goods. So work in process inventory that's transferred and converted is $180,000. And the same for the finished goods inventory. So we know that the work in process inventory is previously is debit. If we want to reduce or to deduct the amount because we transferred those inventory into finished goods inventory, we put this work in process inventory into credit side. So that's C. As for F, cost of goods sold. Okay, so the journal will be cost of goods sold, and the credit will be finished goods inventory. How much the cost of goods sold? The cost of goods sold is $175,000. So let's see. Work in process inventory before. So work in process inventory at first is the sum of these numbers from materials control and also from the the work in process inventory is the sum from the material control, the cash control because of manufacturing labor, and also from manufacturing overhead allocated. You want to know the figure, just sum this number, 55 plus 54 plus 81. Okay, so the total work in process inventory from direct material, direct labor, and manufacturing overhead allocated is $195,000. But because we already convert them into finished goods inventory, the work in process inventory left is the number before minus the work in process inventory that's transferred to finished goods, $180,000. Okay, so the remaining work in process inventory is just $15,000. Work in process inventory. How about finished goods inventory? Before we have $180,000. And after we convert the 175,000 of them into cost of goods sold. Oh, sorry. So the remaining will be this number minus this number. Okay, so we only have $5,000 worth of finished goods after we convert them after the sales occur. So they are converted into cost of goods sold. We know that the cost of goods sold is just $175,000. Okay, so that's for example 3. So we already know how to calculate the total manufacturing cost in job costing using actual costing and normal costing. We also have learned on how to record the journal entries regarding the job costing transaction. And last but not least, we have to learn how to make an end of accounting year adjustment. Okay, so as we know, we allocate the manufacturing overhead before we compute the manufacturing overhead before we actually do the transaction or before we actually do the production. So the amount that is incurred, the total manufacturing overhead cost incurred, and the total manufacturing overhead allocated might be different. Let's see, from this example, it is different. The manufacturing overhead control is 3,000 plus $76,000. However, the manufacturing overhead allocated is $81,000. So most of the time, it's possible to have a different amount of manufacturing overhead control and manufacturing overhead allocated. So let's see. If the budgeted indirect cost or the manufacturing overhead allocated is lower than the actual indirect cost or the manufacturing overhead control, then it means that we under allocate the indirect cost. It means that our prediction is lower than what it really incurred. If the budgeted indirect cost or the manufacturing overhead allocated is higher than the actual indirect cost or the manufacturing overhead control, it means that we over allocate the indirect cost. Now, how to calculate the number? We just have to find the differences between those two things. So actual indirect cost incurred minus indirect cost allocated, or manufacturing overhead control minus manufacturing overhead allocated. If the result is positive, it means we under allocate the indirect cost. However, if the result is negative, it means that the actual indirect cost is lower, is lower. Sorry, I will repeat it again. If the result of this is positive, it means that we under allocate the indirect cost because it means that the actual indirect cost incurred is higher than the indirect cost allocated. But if the result is negative, it means that we over allocate the indirect cost because the actual indirect cost incurred is lower than the indirect cost allocated. Okay, so we know that there is differences between those two accounts, but how do we make adjustments? Oh, actually, there are three approach on how to make adjustment, but in this tutorial, we're going to learn just two of them. The first one is proration approach, and the second one is write-off to cost of goods sold approach. Okay. So to understand how proration approach and uh, the difference between proration approach and write-off to cost of goods sold approach, let's just try to do the example 4. Okay, so example 4 is the same. We have this following information. Donor Corporation manufactures custom cabinets for kitchen, and we are provided with this following information: budget manufacturing overhead costs, budgeted direct manufacturing labor hours, actual manufacturing overhead costs, and also actual direct manufacturing labor hours. From this figure, we can already understand or we can already compute uh, the budgeted manufacturing overhead cost rate and also the actual manufacturing overhead actual manufacturing overhead rate. It is this figure or this number, actual manufacturing overhead rate, and also the budgeted manufacturing overhead rate. And then we have additional information as of December 31st, 2017. We have this following account: work in process control, finished goods control, and cost of goods sold. This is the account balance before proration, and this is the manufacturing overhead allocated for each account balance before proration. Okay, in this case, we have to calculate the under-allocated or over-allocated manufacturing overhead at the end of 2017 and prorate it to work in process control, finished good control, and cost of goods sold accounts based on the allocated manufacturing overhead in each account balance using normal costing. So we have to prorate the differences and adjust it. So therefore, we could uh, adjust the manufacturing overhead allocated and also the manufacturing overhead control. Okay. So let's just first copy the number. We have working process control, we have finished goods control, then we have cost of goods sold. The account balance for the manufacturing overhead cost for the WIP work in process control balance is 15,005 and 15,400, and for finished goods control it is $24,000, and for cost of goods sold it is 921,600. So this is the, okay, I just move to here. This is the ammo manufacturing overhead allocated. Okay, first step is we want to know the percentage of each account balance related to the total manufacturing overhead allocated. So we want to know the total manufacturing overhead allocated. This total is actually, we can also know the total manufacturing overhead allocated from this figure. So we know that the budgeted manufacturing overhead cost is $950,000. So you can just look into the question, but if the question doesn't give you the information regarding the budgeted manufacturing overhead cost, then you can calculate it by just sum up these three numbers. And then we want to know the percentage of each account related to the total budgeted manufacturing overhead. So divided this account balance by total manufacturing overhead allocation. Put the dollar sign. Change percentage. We change the format. The percentage. Okay. So we know the percentage for work in process control is 1.5%. For finished goods control, it's 2.5%. And for the cost of goods sold, it's 96%. Okay. We want to prorate this number to this. We want to prorate the difference between the manufacturing overhead allocated and the manufacturing overhead control. So we first have to find the differences between the manufacturing overhead allocated and between the manufacturing overhead allocated and manufacturing overhead control. So manufacturing overhead allocated, or the budgeted MOH, budgeted manufacturing overhead cost, is $960,000. The actual manufacturing overhead cost is $992,000. Because the budgeted manufacturing overhead cost is higher than the actual manufacturing overhead cost, it means that we over allocate the manufacturing overhead. Difference is MOH minus. Oh, sorry. It turns out that the actual manufacturing overhead is higher than the budgeted manufacturing overhead. My bad. So it means that we under allocate the manufacturing overhead cost. So the differences is the actual manufacturing overhead cost minus the budgeted manufacturing cost. We under allocate $32,000 of manufacturing overhead. So we want to adjust this number. So therefore, the manufacturing overhead cost and the manufacturing overhead cost control and manufacturing overhead cost allocated will be offset by each other. Proration we multiply this percentage with the under allocation. So this is how we prorate or how we divide the differences or the under allocation to each account. For the work in process control, it gets additional 480. For finished good control, it gets $800. And the remaining of the under allocation is right off to cost of goods sold. So how is the journal entries for this proration method? So we know from previous example that manufacturing overhead control is originally in debit side. If we want to close the account, we have to put it on the credit side. Okay, so manufacturing overhead control. As for manufacturing overhead allocated, it is originally in the credit side. So we want to move it to the debit side. Manufacturing overhead allocated. Put the number here. The manufacturing overhead allocated is number, and the manufacturing overhead control or the actual manufacturing overhead is okay, because the credit side is bigger than the debit side. So we put this account in debit side. So it will be balanced. First, we have work in process control is $480,000, and we have finished control, which is $800. Then we have cost of goods sold. So the amount of each account will be higher than it was before because we have to prorate the under allocation of the manufacturing overhead cost. It means that before that, the manufacturing overhead allocated is lower than it should be. So we have so the work in process inventory is understated. So therefore, we have to put additional manufacturing overhead because of the proration. How about the write-off the cost of goods sold approach? It is much simpler than the proration method because I want to put this so you understand what this method is used. So this is the proration method. For write-off to cost of goods sold approach, the journal entry will just be, this will be the same. However, there is no work in process inventory or finished goods inventory because we just write off the differences to cost of goods sold. So the cost of goods sold will get an additional $82,000. So we just write off the differences and adjust differences to the cost of goods sold. So the balance of work in process control and finished goods control will remain the same. However, for cost of goods sold, we'll get an additional $32,000 worth of cost of goods sold because of the under allocation of manufacturing overhead cost. Okay, so that's it for the brief summary of this chapter. I will give you another exercise that I will give you after this.